somebody's making a joke about something. So memes are part of the human culture. If we're able to bring those on chain and trade those, we're going to bring billions of people into crypto.
Welcome to High Stakes, the podcast committed to demystifying the institutional adoption of blockchain technology. I'm your host, Alex Nwaka, and today we're elevating the Web3 discourse in a series of conversations with industry iconoclasts that are shaping the future of Web3. Now let's get started. All right, welcome to another episode of High Stakes. I'm your host, Alex Nwaka. Today, I am joined by none other than Arthur Hayes. Arthur has a reputation that somewhat precedes him in crypto circles. He's really an OG's OG in the crypto space, I would say. I'm really best known for being the co-founder and former CEO of BitMEX. He's gained additional prominence based on some of his macro commentary vis-a-vis crypto and the traditional markets. And currently, he's the CIO of his family office called Malstrom, which invests and advises a wide variety of crypto projects. And again, he operates there as the CIO. So welcome, Arthur.
Thanks, man. Glad to be on this.
Yeah, absolutely. So, Arthur, I wanted to start this conversation by going back to some of your formative experiences and, really before you got into the crypto space and how those may be influenced and applied, you've applied in the crypto context. So you and I have known each other for 20 years. Yikes. Yep. 20 years, dating back to our time at Wharton, and yes. Feel like many in the crypto space don't know about some of your incredible backstory. And so maybe where I wanted to start is maybe going back to some of the experiences at Wharton and so forth. And so, Wharton's sort of a paragon for applied finance and markets. And I'm just curious how, our alma mater sort of shaped your interest in or approach to thinking about financial markets.
I think back in the day, and I know a lot of our friends at like Harvard and Princeton said that we went to sort of a vocational school as if that was some sort of like dig. Now we all fucking work in the same places, so it doesn't really matter. And so, I think the great thing about Wharton, not to toot their horn because I didn't get a free tuition, so if they want to pay me, then I'm all about that. Is that it's extremely practical, and the folks that are the professors have all actually done stuff. You can look them up in the paper and see oh, that motherfucker was on CNBC talking about whatever, or he's written a book, he's made $100 million doing that, or she's done this. So I think the quality of the professors is quite interesting because they actually have real world experience. And yeah, we learn a lot of stuff in theoretical models and whatnot, but I think it's quite a practical education, especially these days where employers actually need real skills, not that you read a bunch of books. I can read a book on ChatGPT. So
yeah, really I totally agree. I totally agree. If you asked me the same question, I would have said, I think it taught me to be a good analyst, right? Assess fundamentals. And then, to your point, more of a real world bend to this is sort of how the real world works as it relates to finance and markets. And still some of that stuff, sort of got shaken a bit, I would say. And we'll get to this, sort of when we entered our careers on Wall Street, how, 2008 was a hell of a time to be on Wall Street as your first year. But just curious, I actually was thinking about this the other day. Did you have Siegel for Finance 101?
No, so I didn't have a good enough GPA, so I wasn't allowed to take that class.
You weren't allowed to take the class? Oh, man. Yeah, it's just, I think, from that perspective, though, I guess, how's your viewpoint changed from the classroom, let's call it 20 years ago, as it relates to how you think about markets, right? You talked about how, hey, there's sort of the ivory tower of education, and then there's kind of the real world of finance that you've been steeped in, right, as a trader and as an entrepreneur and innovator. So what's the biggest thing in your view that's sort of changed about your viewpoint?
What's really changed is I think none of that stuff matters. Not capital asset pricing model, efficient frontier, all these interesting things that we learn don't mean a fucking thing if the Federal Reserve and the US Treasury are just going to print money every time there's a problem. And so what we really should have studied is American politics and how the money markets work. Because if you could understand how the quantity of money is growth increases and decreases, you'd be a much better trader than whether or not you understood the factor pricing model for some bullshit equity.
So it's super funny. I couldn't be more aligned with you on this. Again, when I was thinking about this question for you, I think for me, it was the sheer size and scope of government in specific asset classes and markets. and how that distorts this concept of like efficient markets would have been the way I would have answered that same question. And so it's funny that you and I are sort of aligned or in that same boat. Obviously, post Wharton, we both ended up on Wall Street. You cut your teeth at Deutsche Bank in Hong Kong. As I mentioned before, 2008 was a heck of a year to be, joining the street. Biggest lesson as it pertains to markets and trading coming out of maybe that first year on the street or maybe first 2 years on the street?
Going into working at DB, I sort of had this view that, it's really, free markets are great. It's really great if you're an institution that can withstand vicissitudes of markets without taking a government bailout. So 2008 happens. Deutsche Bank is one of the few banks that didn't take an overt government bailout. We know now that they were taking money from the Fed and blah, blah, blah. But Deutsche Bank lied about the size of the issues on their balance sheet. It didn't take a bailout from the German government. Whereas all of the counterparts, especially in America, whether or not they wanted to or not, they all took a government bailout. They had the pref shares that the Treasury owned. We saw the effect of that in sort of like 2009 bonus payments. Everybody who worked in an American bank got paid. Everybody that worked at Deutsche Bank or like a Me Too shitty European bank didn't get paid. So it taught you something. Well, I can take a bailout from the government and then get paid a lot of money, or it cannot, and my bank gets fucked, right? And if you take a look at the Deutsche Bank share price from like 2008 to the present, it's probably one of the worst performing major investment banks versus all the other American banks that all took government bailouts, and their stocks are rip-roaring, right? So I think that was probably the biggest lesson coming out of the crisis was like, free markets are a joke. This doesn't fucking matter. How do I get that free government money?
There's also just like the interconnectivity, right, of like the traditional sort of global financial system, right? Like I just remember all the talk about like credit default swaps and spreads on credit default swaps. That wasn't something that necessarily I'd been exposed to, but then you start to talk about, well, hey, who's liquid? Who do we have counterparty risk to? And you're talking about big banks, right? Other banks that, we had friends that were working at, probably worried about their jobs, every other day. And to your point, like bonus payments that, sort of represented, sort of differing philosophies on like what happened, with each one of those banks. After Deutsche Bank, you sort of jumped into, crypto as an innovator, right? That's the way I would describe it. I would say, what inspired you to start BitMEX? Was it sort of a personal thing? Was it some of the lessons that came out of sort of your early career? Or what was the real driving force?
So I moved from Deutsche to Citi. I did Citibank for 2 years. I got let go in the spring of 2013. And I knew intrinsically that, I wasn't going to make the type of money that I wanted to make in banking, right? So we all graduate from university. We're all going to make billions of dollars, $100 million, whatever, right? We hear about these guys at these banks with these massive bonus payments. And then 2008 happens and like that isn't the case. Like the number of people making more than $1 million on a trading floor is like, you could probably count them on your hand. Nobody's making 50, $100 a year at a bank, even if they're crushing it on P&L. The bank says, that's nice, but this other part of the bank is fucked, so we're going to take all that money. So I was sort of disillusioned, like I can't make the type of money I want to make in investment banking. The only way to do that is get in on the ground floor of something new, technologically speaking. And so when I lost my job, I was like, well, I have the perfect opportunity. I don't have a family. My expense base is quite low. I have lots of friends. I can sleep on their couch in Hong Kong if I need to. Let me go and try to do something different. I kind of dabbled in crypto for a bit. I bought some Bitcoin. I found this exchange called IcyBit. I was starting to do arbitrage, selling futures, buying cash. And the spreads were massive at the time. Like I have no programming skills. And I was just like doing this on my keyboard and making like 200% per annum returns, doing like simple stuff that I learned how to do at the bank. And so after a while, I was like, well, I'm not exactly that talented of a trader. And so a trade that with this big of spreads is obviously going to compress as more people see it and get involved. So how do I create a more longer lasting business? So I thought about what my skill set was, and it's derivatives, right? That's what I know how to do. There seemed to be this gap in the market. There was only one derivatives exchange at the time. I thought they could do a much better job in terms of product development and sort of growing the market. So I say, fuck it. Well, I've got this opportunity. Let me try to start my own thing. And that was sort of the idea behind it. Wrote a pitch and all this kind of stuff. And then I was like, okay, well, I need some co-founders who actually know how to work with computers. And so I went through my network in Hong Kong, and I was lucky enough to find my two co-founders, Ben Dilo and Sam Reed. And then I pitched them on this idea. Let's do a crypto Bitcoin derivatives exchange. And like, okay, cool. And so then we started building in early 2014.
And the rest is history, right?
Exactly.
And I think from your perspective, what was the biggest innovation that BitMEX sort of contributed to the crypto space? There's obviously a couple things that would come to mind for me, at least, perpetual swaps, sort of the leverage, right? And you also talked about sort of the derivatives and some of those advanced, sort of strategies. But if you were to say, hey, just pick one thing that you think was really the core innovation that you guys were really known for, what would it be?
I mean, obviously, it's a perpetual swap. It's the most traded crypto instrument in the history of crypto. Every single exchange, whether decentralized or centralized, has a perpetual swap. And pretty much it's the copy paste of what we created back in 2016. But what really allowed us to have the perpetual swap and then the 100x leverage that we sort of pioneered was great tech. Right. So my co-founder, Ben Dilo, he cut his teeth building high frequency trading systems for hedge funds and investment banks. And so when we got into crypto, we built a system that was extremely safe. By that, I mean, we were real-time margining people. Not even the CME and CBOE do real-time margining on the trillions of dollars of notional that they trade every day on their markets. It's extremely difficult to do. Obviously, crypto forces you to do it because there's no, let me go get the lawyers and sue my customer to get my money back. You have to liquidate people immediately to have any chance of success as an exchange. And so this really good tech allowed us to bring out the 100x leverage, allowed us to bring out the perpetual swap ahead of all of our competitors. And that sort of gave us that 2 or 3 years of edge where we made most of our money in terms of BitMEX and rose to number one exchange and fame and all that kind of stuff.
Mm-hmm. And I don't know to the extent that you can talk about it, but any innovations that you weighed or thought about or thought would be interesting in the BitMEX days that you didn't actually get a chance to realize or bring to market? Anything that was sort of in the lab, felt really exciting, but never really made it into sort of the public view?
I mean, we're still working on this today, and some exchanges have obviously rolled it out. But multi-coin margining was something that we were trying to do well before FTX came on the scene, and sort of that was, I think, one of the big things that traders loved about FTX was they supposedly did multi-coin margining. If you had Ethereum, you could margin a Bitcoin US dollar perpetual position, right? We know now that was a complete lie, that their Alameda was taking basically massive risk on the back end. But that was an innovation that we worked on. We weren't able to get there because it's extremely hard problem to solve in sort of a 24/7 real-time margin system. But I think we're going to be rolling that out soon in the current version of BitMEX.
Very cool. Maybe pivoting now to sort of what you're doing with your time currently at Malstrom, really turned, your focus, really to investing and advising. And so for those out there who don't know Malstrom, can you talk a little bit about the mandate and sort of what your vision is for what it becomes, right? I think there's sort of the what you're doing today and then what your grand vision is for Malstrom over the next, 10 to 20 years.
So I love financial markets. I love managing my own money. I don't like managing other people's money, but perfectly fine to manage my own money. And so given that I'm in this crypto space, I love financial markets. I love trading. I thought, is there a way for me to basically outperform Bitcoin and ETH? I have a big bag of Bitcoin and ETH. I want to see if I can invest in early stage crypto projects or trade in a liquid fashion and beat just sitting on my ass and, hodling Bitcoin and ETH. And so that was sort of the genesis behind Maelstrom. I hired my first, basically the investment manager, Akshat, who used to work for me at BitMEX on the venture side. And sort of I tasked him with his goals. Okay, I will pay you a fuck ton of money if you can outperform these two assets. Go travel around the world, speak with interesting projects, and let's see if we can build a high quality portfolio of companies. And so we write very, very small checks, $50,000 to $100,000. It's really just to get exposure to a lot of different things. And sort of what we stumbled upon is sort of this advisory model. So we do a lot of advising of projects. We have very specific and sometimes contrarian views on how you should operate a token project, how a token should come to market, what founders should be focusing on in terms of their project. And sort of we are known for basically a hype machine on crypto projects. We give our advice. Some people take it, some people don't. And we've had, some very standout successes in our portfolio today.
And one of the things when I look at your portfolio that I would say is maybe a thesis is really decentralization. Sort of how does that relate maybe to your view of staking or just the crypto space in general?
Well, I think we reward decentralization. So Bitcoin is the most valuable crypto. It's obviously the most decentralized of any crypto. And so everyone tries to claim that they want to do decentralization when maybe most of them probably shouldn't because it doesn't make any sense. But decentralization is extremely hard. There's only a handful of projects that are going to succeed because number one, it takes a very, very long time. It's expensive because you have to make a lot of compromises in terms of what you're going to offer if you want to make it truly decentralized and censorship resistant. So we want to identify the building blocks of what can allow projects to be decentralized or decentralized networks in and of themselves, and support them in any way we can, because we believe those are going to be the standout projects. Because at the end of the day, the whole point of crypto is to build decentralized applications, whether it's in finance or money or other sorts of verticals, is not just to create another like centralized version of Web2. If you were going to do that, then let's just go do that, do an IPO, and deal with all that bullshit.
And when you think about staking specifically, how do you frame that in your own mind from maybe even just like a traditional markets like standpoint? Obviously, there's sort of a yield generation component. There's ways that you could look at it where you're participating in consensus, right, in a decentralized fashion. How do you think about staking just like generally from a philosophical perspective, and how do you see that evolving?
It's another way of achieving consensus, hopefully in a decentralized and censorship resistant way. Instead of doing work like in Bitcoin, proof of work mining, you're providing an economic asset. And if you act in a way that's contrary to what the network wants you to, then you get slashed, right? So I think jury's out on which one is better. I think they're better for different sort of use cases. But obviously Ethereum staking, and sort of now it's proliferated into a lot of different layer one blockchains, is an interesting way to generate endogenous yield within the network and sort of help incentivize people to act in accordance to the network's goals. So I think it's a great thing to have. It offers yield. There's all sorts of like fixed income interest rate things we can do. If more people are staking, more people are earning rewards from staking. There's all sorts of risk mitigation things to how do you offlay the risk of slashing and whatnot. So I think it's extremely interesting, definitely necessary for the build out of the capital markets and crypto. And so I'm super bullish on staking as another way to achieve consensus.
And I guess speaking of some of the larger proof of stake networks, I'm just sort of curious because I think it's part of the zeitgeist currently, and I think an open debate. Any predictions on what we'll see regarding like Salana versus Ethereum usage, over the next, over the next cycle, let's call it next 1 to 3 years?
People have pointed out that with the addition of layer twos, the costs on transactions on Ethereum have gone down. Obviously, the speed's gone up. I don't know if it's the same or comparable to Solana. I don't think it really matters at the end of the day. I think the layer one blockchain that's going to basically win will do two things. Number one, they'll have the most developer talent. Right now, that's Ethereum. And number two, they'll be the easiest way and the most liquid place to bring culture on chain. So if we're thinking about what has Solana done well, that basically none other chain has really done, it's meme coins, right? It's this energy around trading worthless pictures and jokes on a blockchain. But if you think about what humanity is, this is what humans do, right? We joke around with each other. We, send photos around the internet. Why are people on Instagram like all day? They're looking at funny cat photos and whatever, right? Or somebody's making a joke about something. So memes are part of the human culture. If we're able to bring those on chain and trade those, we're going to bring billions of people into crypto because it's interesting. It's fun. It's lighthearted. They don't have to understand anything about finance, about, discounted cash flows or whatever. It's like, oh, does that meme slap? Yeah. Okay. I'm going to go buy some of that. Oh, how do I do it? I use my Phantom wallet, I connect, and 2 minutes later I'm on Jupiter or Radium or whatever. And I've bought this token because I like the creator who made it. I really identify with that person's ethos or their behavior or whatnot. And so I think that's how we get people on chain, and that the chain that is able to do that the best is going to generate billions of users very, very quickly.
And how much of that do you think is also just related to, sort of how management or sort of leadership around these projects are sort of operating? So I think you could make the case that Solana's made just a very significant investment and effort around product and scalability, right? I think that's very clear from both like what we're seeing publicly and what we're seeing on chain for that matter. Ethereum's sort of taken a bit of a different approach, I would say, and one that's been, I think, a bit more consistent. I think there's a question that, I'd be curious your opinion on this. Vitalik's kind of taken a little bit of a step back, I would say, in terms of like being more hands-on at Ethereum. But do you think that there's some credence to him maybe like taking the reins again, being more vocal and really providing maybe more of a strong sort of like leadership, sort of paragon within Ethereum?
I mean, I think Ethereum is probably at the stage where it's hopefully less about the front men and more about what are the actual developers building. It's got a head start. It's still, I don't know, 4 or 5 times as large as Salana in terms of market cap, way more developers, a much more robust ecosystem. There's very few applications in sort of the layer one space where the originator of that vertical didn't start in Ethereum first. So I think Ethereum still leads in that respect. Obviously, Solana's done a great job in terms of UI, UX, and the community building. And that's where they're really, really strong. And obviously this meme coin surge is really a Solana phenomenon. And so that's sort of how I would delineate between the two. I think, yes, if you're an upstart project, you need to have probably more of a cult around, the early founders, because that's how you get humans engaged and really believing in it, versus Ethereum, which is, at the beginning it was a cult around Vitalik when it was a much smaller project, but now it's a much bigger thing. I think that hopefully they can escape sort of Vitalik's gravitational pull and be more like Bitcoin.
I would say that you've got some of the best pattern recognition in the business. What trends do you think are most important to watch in terms of, let's call it green shoots of either killer applications or sort of, genuine type of developments that are happening on chain? I think, you mentioned on chain growth, right? And what drives that, or what you could possibly see driving that in sort of the near term. Is there anything that you sort of watch or look for that kind of gives you a sense of green shoots, either in a particular ecosystem or just more broadly?
I mean, I'd say right now, a lot of the things we're seeing are sort of Me Too, where deep in staking stuff, real world assets, sort of basis trading, sort of stable coins. We've had a few standout successes this cycle, and now everyone's sort of repeating them and just trying to flog them off to VCs. One thing that I'm super bullish on is AI, but not in sort of the traditional way of thinking about it. Is how do we engage AI agents to act on chain without sort of human interference? And so blockchains that enable that sort of interaction. We have a project called GenLayer. They're releasing what they call intelligent contracts, where you can actually have AI agents go and make decisions and achieve consensus using their blockchain. So stuff like that. It's not going to be, anything popular in the next 1 to 2 years, sort of more of a 3 to 5 year type of play. But I would say we're not seeing too much of that stuff right now. I think right now everyone's like, oh, it's a bull market. This kind of worked in 2023 and early 2024. Let's do it and maybe have a better marketing plan or better Ponzi-nomics on the token and see if we can extract some value before everyone gets rugged.
Totally, man. I appreciate that. Moving to your real red meat here. So kind of moving into the realm of, what I would call global macro geopolitics. So how do you see crypto market performance bearing out in sort of the two potential scenarios for the White House here? So, you get the GOP in the White House with Donald Trump, or, you're looking at the Dem ticket with, Kamala Harris. What do you see as sort of the potential, performance of the crypto markets in either one of those two scenarios?
So neither one of them are really that different at the end of the day in terms of policies or outcomes, right? If you're Republican, you're going to cut taxes and keep spending the same. So the government deficit widens. If you're Democrat, you're just going to have more welfare payments to people, and the deficit widens. So at the end of the day, there's free money going to your respective constituency in a particular form, but there's no desire to rein in government spending. If you think about Trump in his first term, he was probably one of the first presidents in US history which essentially sent out a check to every single American. He raided different government departments and said, here's some money. It wasn't means tested. Everybody got a check, right? No one's done helicopter money in US history before in that sort of manner. So any claim that he is some sort of fiscally responsive person is complete and utter bullshit. He's just the same as a Democrat, and obviously all the Republicans went along because everyone liked it. Everybody liked getting a check from the government. And so, oh, you were the representative that got me that check. I'm going to vote for you again. So I think none of them are really that different. And if you think about all the policies of the Biden administration, it was a Trump policy that he did, but in his office, they rebranded it and said, no, that wasn't Trump, that was me, right? It's typical politics. So I don't really see much of a difference between the two. I know the crypto people are like, oh, Trump was pro-crypto. Well, he was in office for 4 years and he did fuck all. So his record says, no, he's not. So I think the crypto situation in the US stays the same. I also don't think it really actually matters, right? The United States is 4% of the world's population. There's another 96% of people out there in the world. I get it. If your project is very focused on the American market, then you're quite concerned about the minutiae of regulation between the two administrations. But for the rest of us around the world, it doesn't matter. So I think what does matter is who actually wins and what's that process, right? Is there a contested election where you have both sides fighting? Maybe you have some violence in the streets in America America, you have some paralysis in terms of government operations, right? The debt ceiling expires on January 1st. Somebody needs to extend that. It will get extended, but you could see some sort of market consternation around like, who is the president? Who's in charge? If I were any sort of country that was looking to launch a military operation that the US would be opposed to, I would wait between the period of November to probably January, February, and I would go full on because there's not going to be any leadership in America for those months. It's just going to be infighting to determine who is the president. It doesn't matter who wins. It's super close. No, neither side's going to accept the result without either probably a Supreme Court ruling or some violence in the streets. And so I think that's probably the biggest risk for markets is this sort of power vacuum for, 3 to 6 months in the United States. And maybe one of the United States' adversaries takes advantage of that to launch a military operation in a sphere of influence in which usually the U.S. will respond, but now they're hamstrung.
And I'm curious, like going maybe a level deeper on just sort of the GOP's platform. They obviously inserted, crypto as one of the, sort of key, I'll call it GOP platform items for the first time in sort of the history of a major party. There's been some talk, in the last couple weeks about creating sort of a U.S. sovereign wealth fund. I'm curious if you think that if that's something that becomes a reality or is a potential reality, and there is some sort of either policy or demand side, reaction in terms of the U.S. Treasury or the sovereign wealth fund of the U.S. potentially holding crypto or Bitcoin. Do you see that as a game changer? Do you think that's something that's not likely? Curious how you think about, sort of the potential of that is just like a, sort of an externality, so to speak.
A sovereign wealth fund in the US would be just further along the lines of more government borrowing. So typically, I spend a lot of time in Asia, specifically Singapore and Hong Kong and other countries. They have sovereign wealth funds because they run primary budget surpluses and a capital account surplus and a trade surplus. So they have wealth, right? And they don't give that wealth back to the people. They keep it in a centralized fashion at the government level. And that's what you call a sovereign wealth fund. Or if I'm an oil exporter and I have all these earnings, I keep all this money on behalf of the people and I invest it. Norway, Saudi Arabia, whatever, right? The United States is a completely different situation. Both the capital and trade account are in a deficit. So where's the capital coming from? Where's the income coming from to fund a sovereign wealth fund? They have none. They're borrowing just to do normal operations. So if a sovereign wealth fund were to be enacted, what would happen would be the Treasury would increase the issuance of bonds to earn money. They place this money in the sovereign wealth fund and the politicians would dole it out however they see fit. So take the Bitcoin thing out of it. It doesn't matter if Bitcoin is bought or sold by a sovereign wealth fund in the US. Just the fact that the US has borrowed more money to put it in a fund so that politicians can buy stuff that they want to buy, that's negative for the dollar. It increases the amount of supply of dollars in the world, which is ultimately positive for crypto. So even if they don't buy any Bitcoin, just having a sovereign wealth fund means that crypto prices go up, gold prices go up, risky assets that have been fixed supply go up in price in fiat terms. I think it'll happen regardless of whether you have a Republican or Democrat situation, because if you're able to convince politicians that here's another way for us to hoist inflation upon the people and take unilateral control of doling out favors to whoever we like, they're going to do it because it increases their power.
No, absolutely. And I'd also be curious how you think about institutional adoption on all of this. There's been quite a bit of talk about, the institutions are coming into, crypto, whether it's, the large asset managers launching ETFs or larger banks, sort of moving into the space for custody or other things, right? Do you think that the institutional adoption narrative is either played out? Do you think it's something that, can drive the market in some way, shape or form in this cycle? How do you frame it?
So I think the institutional adoption narrative is very harmful for founders. If I see a project and the crux of their offering is I'm going to be successful because institutions, then I want nothing to do with it. Because institutional adoption means that Larry Fink makes money. The CEO of Vanguard makes money. Jamie Dimon makes money. David Solomon makes money, right? That's institutional adoption. They're not going to allow a bunch of fuck ups in crypto to take their cake, right? They'll adopt it. They'll offer products to their client base and they'll shut everybody else out, and they'll bribe all the politicians to make sure they enact laws so that you can't come onto their turf. So institutional adoption is not helpful for project founders. You should be focusing on retail adoption. How do I create a product or application that is suitable and appealing to a wide swath of people who are left out of the game of money printing and financial repression around the world? So yes, institutionals will come in and they'll launch their particular financial products like ETFs. There'll be hopefully a bid on crypto prices that offer like a price performance in fiat terms. But in terms of actually like pushing the industry forward and building better solutions to allow more people to transact on chain, that's not what they're there to do. They're there to sell financial products to their customers for a fee and make sure you can't do the same to their customers.
And what do you think, there's obviously a lot of historical relationships or correlations, right, between sort of the crypto markets and a variety of other either markets or assets. And do you think there's any one of those historical correlations that's followed quite closely that breaks down or decouples in the next crypto cycle that you see as fraying?
I mean, obviously, crypto's been kind of coupled up with like NASDAQ and tech stocks recently. I think if we start to see sort of this very inflationary national first policies around the world, we might see a big underperformance in tech stocks, right? They've performed very, very well. It's because everyone invests their capital in the United States and they go to the Magnificent Seven and everybody is hunky-dory, right? But if governments around the world are starting to say, hey, if you have savings, if you're in France and you have savings in French banks, why are you buying US stocks and US bonds? If you're a Japanese pensioner, buy stuff in Japan, don't buy stuff in America, right? So I think countries are like, we're broke. Why are we financing America? So I think that's going to change. And if you start to see that, then you see these big tech stocks, which are the most overowned stocks, sort of underperform. I think crypto still does well because the amount of aggregate fiat money is still going to grow. And sort of we break that relationship. So I think a lot of macro people that I listen to deride crypto. Like, oh, it's just another like high beta form of the NASDAQ 100. Why do I need crypto? Let me just buy more Facebook. Right? It doesn't really do anything. It's not a store of value. It's not an uncorrelated return. And yes, I agree with you. But I think as US big tech dominance wanes, as countries start to focus their capital internally, then I think Bitcoin really shines and you sort of see this decoupling happening.
I'm just curious because we spend a lot of time in the US like fixating on, the US, the Treasury, the Fed. It's like kind of the center of the world. You're obviously a much more global citizen. As you said, you spend a lot of time in Asia. I think outside of the US, what institution and or person do you think has the most influence at the intersection of global macro and crypto markets? Like when you think about who you sort of watch and say, that's like that marginal person or institution like has a lot of sway in terms of how you think about like the way the crypto market interacts with the global macro?
Well, I think at the end of the day, what Xi Jinping decides for China and sort of the BOJ run by Ueda decides for Japan is much more impactful upon, number one, the United States and how they run their monetary policy and crypto in general. Because at the end of the day, China and Japan hold the most amount of dollar assets globally. Both of their economic systems and monetary systems are just mirror images of the United States. But they have some deep problems that they need to solve. Japan has all these assets. Their currency is too weak. They need to repatriate assets. China is in the midst of a deflationary cycle. And at some point, they need to reflate and devalue their currency. And China and Japan hate each other and they're big competitors, right? So US monetary policy is the remainder of what does Japan and China decide to do and not the other way around. And so I'm very focused on what is China doing. Very interesting this week, the PBOC was very aggressive in cutting a bunch of policy rates across the board. It still is not going to be enough to solve their housing crisis, but it's a step in the right direction. And the second, when Xi Jinping decides that he's going to unleash bank credit to reflate the property sector, then you're really going to see some global inflation and crypto outperformance. And in Japan, Ueda has been very steadfast saying he will raise rates. Maybe not at the fastest pace that I thought it was going to happen, but it's going to happen. They're going to get to 1.5%, 2% rate. Policy rate at the BOJ. The yen, in my opinion, is going to 110 or 100. And capital, trillions of dollars of capital will be repatriated from the United States and the EU back to Japan. And this is going to be a monumental shift, and it's going to completely change the architecture of trade and economics globally. It might even lead to world wars, who knows? But I think those are the things that I am more focused on. The Treasury and the Fed are basically trying to get Kamala Harris elected, and so you can focus on that and see the short-term situation. But the real meat is happening in Japan and China. What do they decide to do, and what's the pace of that adjustment?
Very insightful. When we just talked about, sort of the dominance, I guess, of what's taking up your mind share in the Asian market specifically. You've called Asia home base for 15 years plus now. I'm curious how you benchmark Asia as it relates to the crypto context. And I typically think about this in sort of three categories. It's like builders, entrepreneurs in the crypto space, capital that services that, sort of constituency, whether it's venture capital or like hedge fund dollars, and then distribution. And by distribution, I sort of mean like, what is the consumer of those applications and so forth. So how do you see Asia from that context and lens relative to maybe the US or rest of world?
All the traders are in Asia, right? So if you think about it, the most profitable trader you can onboard as a project is in South Korea by orders of magnitude, bigger than any other country. They trade the most per capita globally. So that's the most important market for trading. If you think about users, then we're talking about China, Vietnam, Turkey, Indonesia, Thailand, big NFT traders, big users of this technology, right? So the consumer is in Asia. Now, most people with capital in Asia made most of their money either in a monopolistic family business or in property. So they don't really understand tech. They're not going to risk their money in some sort of like pie in the sky idea. So capital formation in terms of venture capital is basically zero in Asia. So if you're a founder in Asia, you need to build a product that actually makes money, which is why you see most of the biggest exchanges and most profitable crypto stuff. The founders are in Asia because they actually have to make money. Versus in the United States and Western Europe, you have this very deep venture capital risk appetite and pool of capital who are perfectly willing to take a zero on 99 projects if one of them is a Facebook, right? And so now you're just shoving billions of dollars at your preferred type of founder, and they go and they build whatever they want to build, but they have no connection to the market. They're thinking, how do I please A16Z and Kleiner Perkins versus Jaewon Kim over in South Korea, who's the one spending the money. And so I think you see a lot of deep tech builders in the US and Western Europe, but they have no ability to translate it into product market fit and commercial success because they're too far removed from the customer, and they have too much money where they don't have to care about what their actual user wants to have happen. So it's a very interesting dichotomy between sort of the West and the East. And obviously that makes it very profitable for traders and nimble VC operators who can play both sides and pick and choose the types of things they want to invest in.
Got it. Well, Arthur, we always ask all of our guests here on High Stakes for their high stakes hot take. Give us your boldest prediction for crypto and Web3 for the balance of 2024, or if you want, 2025.
So the mother token will be a $1 billion plus market cap meme coin by the end of the year. That's my hot take.
From your lips to God's ears, right? Arthur, thanks for coming on to High Stakes. We look forward to having you on again soon. This has been fun.
Thank you, Alex.
Yeah, take care.
Keep exploring and keep innovating. Learn more at validationcloud.io and follow us on X and LinkedIn to stay connected as we continue to shape Web3 for institutions. This is High Stakes with Alex Nwaka, signing off.